Alright class, so now we're going to move on to Chapter 8. Chapter 8 is going to walk us through what to do after we're finished with our trial balance. So far, we collected our source documents, we analyzed them to figure out which accounts were affected. We then went and recorded all that information into the general journal. After we're done with the general journal, in the last chapter we took the information and then we separated it into their individual accounts that we call ledger accounts. Okay? Once we did that, we went and we put our balances on trial to make sure that all the debits and credits equal each other, and we proved it to say that yes, we did record it accurately. But now we're going on to step number 6 in the accounting cycle. We're almost there, and this is the worksheet. The worksheet is used to prepare ourselves for the next phase, which will be getting ready to do our financial statements. Okay? So that's what it looks like. The worksheet is a working paper used to collect information from the ledger accounts used in completing the end of period activities. Okay? At the end of the period, you want to look at something, a financial statement or something that's going to summarize all of the information. And to do that, we have to prepare all the numbers, all the things that took place that affected our accounts, that made them either increase or decrease. So here we go. On the worksheet, same thing, who, what, and when, the name of the business, the name of the sheet, in this case it's going to be worksheet, and then the period that it was covered. Usually you'll do for the month ending or for period ending, and the end of that month or the end of that period is a worksheet. Alright, so this is what it looks like to start. The first thing that you want to do is put in your heading. Wilderness Rentals was the name of the company. The name of the sheet is worksheet, and then it's for the month ending May 31st in this case. The first part is we just want to go ahead and copy everything that we did inside of our trial balance. So we just go through all the accounts the same way we listed them in the trial balance. We would list them all here. So you're taking that right from your trial balance. Once you have all your accounts, you're copying all the debits and credits just like you did in your trial balance. If it was a debit on the trial balance, it's a debit here. If it was a credit, it would be a credit on your worksheet. So up to this point, all we did is copy all the information from our trial balance. Now we want to add up all of our debits, and we want to add up all of our credits to make sure that they equal each other. Once those are in balance, we can move over and start figuring out which columns to put these things in. Okay? So that's the first step, is getting to this point. Now, if you look over here, we have two different categories that you can choose from. Okay? We have our income statement over here, and we have our balance sheet. So these are the two financial statements that we want to prepare for the end of the period so that we can analyze. So we have to figure out which accounts go into each. There's a couple ways to figure this out. All of your assets, liabilities, and owner's equity accounts would go over into the balance sheet section. All of your revenues and your expenses would go into the income statement part. So whatever it is here in the trial balance is what it would end up being either on the balance sheet or on the income statement. Another way to do it is by numbers, okay? Because we know assets, liabilities, and owner's equity go on the balance sheet, every account that starts with the number 1, the number 2, or the number 3 would go on the balance sheet. Every account that starts with the number 4 or starts with the number 5, which are our expenses and revenues, would go in the income statement. Okay? The last way to do it, which is the easiest way, although it doesn't take much thinking, is that everything, if you go down here, you're going to get to this one account called income summary. Alright? So everything from income summary down goes on the income statement. Everything above income summary would end up going in the balance sheet. Okay? So let's start moving them over. Cash and bank, it's an asset, so it goes in the balance sheet. If it's a debit here, it would be a debit over there. Okay? Accounts receivable, it's a debit here. So you would move it here, it's an asset, it goes in the balance sheet. Accounts receivable, you keep moving them over. Office supplies, asset, goes in the balance sheet. Office equipment, asset, goes in the balance sheet. Camping equipment, it's an asset, goes on the balance sheet. Accounts payable, it's a liability, right? Goes on the balance sheet. Accounts payable, liability goes on the balance sheet. If it's a credit here, it would also be a credit here. Okay? Keep going. Accounts payable, capital, it's a credit, you put a credit. Owner's equity, it goes on the balance sheet. Withdrawals. Withdrawals is an owner's equity account. It goes on the balance sheet. It's a debit here, so it's a debit over here. Alright? But now we get to income summary. And we get to our revenue and our expenses. So now, those don't appear on our balance sheet, but rather they go into the income statement columns. So, same rule though, if it's a debit here, it would be a debit on the income statement. If it's credit, it would be a credit. So let's start with revenue. We know revenue has a credit balance, so we would move this and we would put it on the credit side in the income statement section. Advertising expense is an expense, it would be debited, it's debited here, it's debited there. As long as it's debited on the trial balance, it stays a debit on the income statement. Alright, So now we moved all of our accounts over, right? We have all of our expenses, we have all of our revenue, we have our assets, liabilities, and owner's equity. Now we have to add up each column. So we're just going to add up this first column. We're going to add up this column. We're pretty much just going right down, guys. All we're doing is adding them all up. And this is what we end up getting. The total of our debits in the income statement is $8,687. Credits, $9,716. The total of the debits in the balance sheet, $19,658. The total of our credits is $18,629. So now we have all of them, but there's a problem. They don't equal each other. I know that we've taught that the way you check yourself is to make sure everything is in balance. But this is how we can check. Okay? The way that we know that we're doing it right is we need to find the difference between them. Okay? If we start in the income statement and we look at the difference between our debits and our credits, it should be the same difference when we subtract these as the difference between our balance sheet debits and credits. Okay? But here's the thing. We're also trying to solve to see if we made money or lost money. So in this case, in the income statement, all of our credits are our revenue accounts, right? The sales we made. And all of our debits are our expenses. So when we find the difference between these two, if our revenue, our credits are higher than our expenses or debits, we made money. We have what's called net income. If our expenses, our debits are higher than our credits in the income statement, then we have what's called a net loss. So let's see. When we find the difference between these two, we come up with $1,029, okay? Our credits are higher. We have 9,716 credits or revenue, and we have 8,687 for the total of our debits. So in this case, we actually had a net income because our credits were higher. Our revenue is higher, okay? If we look over here, we're going to see the same difference. We ended up with 1,029. So we know that we're in balance, that these equal each other because the difference was the same. But what we have to do to make everything balance out is now we have to take that difference and we have to add it back to the smaller amount. So we take, in this case, the 1,029 and we add it back to the debit side because that was the smaller amount. And we get 9,716. It equals what the credit was. We basically bring the credit down, we would add it to 0, and we balance out. Over here, we would do the same thing. We would take that difference and add it back to the smaller amount, so we're adding it back to our credit to get a total of 19,658. And now we're in balance between these two. Our debits and credits equal, and our debits and credits equal in the balance sheet and the income statement. But we have to indicate if we have a net income or a net loss. And in this case, we have a net income, and you just line that up with this number here. All right, we have to make sure, though, that we're also ruling. So the first step here in the trial balance, we do one line and then two lines to show that that's our final answer. Every time we add up all of our totals here, there's one line here showing that we added all these down. Okay? That we added everything here. But finally, we have to add the difference back to the smaller amount, so we place a line here to show that we're adding back the difference. And then when we end up with our final answer, we put the two lines underneath to show that it was done. Okay? And this is how we complete the worksheet. Added everything up. We figured out what our net income or net loss was. And we have all of our accounts that are in balance. So this is how we complete, in this case, a 6-column, 1, 2, 3, 4, 5, 6 column worksheet. All right. That will complete Chapter 8. Next, we're going to go on to completing our financial statements.